Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. This is Henry and today is April 17, 2019. The time is 4 a.m. GMT approximately. So for today we will be looking at the chart of the Bank of America. This is a 30 minutes chart and we can see right here this is a 1-2-1-2, so it's an impulse. It's a nest. We are within this wave 3 in the red in the Bank of America. Okay, so this rally ended with 1, this pullback here as a zigzag ended with 2, and then now we are within the wave 3 in red and the wave 3 in red subdivides into 5 waves typical of an impulse. We have this wave 1 of 3, wave 2 of 3 here. So this wave 1 of 3 also subdivides into another 5 waves nicely. You can see that each wave subdivides into another 5 waves. This is a fractal nature of Elliott wave, and this wave 2 is in a zigzag structure here, EPC. So now we are we already ended this 3 swings pullback, held above 28.74, starts to turn higher again. The idea now is that as far as the stock stays above 28.74, which is the previous wave 2, we should be looking for the upside. Okay, and the right side is green, meaning that we favor the upside. So the upside is we think is the right direction to trade. Okay, in the Bank of America stock here. Now stepping back and looking at the larger time frame a bit, this is the 4-hour chart of Bank of America. Okay, and if you want further count, full count of different time frames, you can always try our service. We have 14 days free trial, and the link is provided in the description of the video. And over here in the 4-hour, we can see, if you look at it from this low, which is on December 25th 2018, okay, this is the same low across the indices, right? Any index, any global index sort of form a low late December last year, and then since then it starts to rally. Now look at this Bank of America. This rally is starting from December 25th. We have this sequence of high, right? So this is a bullish sequence. You got what looks like an impulse here ending with A. You got a flat, expanded flat with B. Now it has started the next leg high, breaking above the previous peak. So this is bullish against this B, technically speaking, right? This is really the most important bullish pivot. If this is going to continue in the C leg, then it needs to stay above this B. Now going back to the 1-hour chart, this is starting from the 1 and 2 in red, which is this one, 1 and 2 in red. So after ending with B, it has started the next leg higher in the C. So as you guys know, C leg this can either be ABC or 1, 2, 3, right? I mean, the more conservative way is an ABC. But even so, an ABC in the C leg needs to be equal to the A leg. That's the guideline for an ABC. All right, so at least then you should be extending higher, and not only that, you have to reach equality to the A as a guide, right? But also the C leg needs to subdivide into 5 waves. So you got a 5 waves here, but then so far after this marginal high, you have what looks like a 3 waves, honestly speaking now, and so it doesn't look complete by any means to me. If this is going to be, you know, like a 5 waves, so that really favors the idea of more upside. Now of course things can you know, the detour is that this 1 and 2 is really the only thing that could change. For example, if you know, we are forced to do it, for example, okay, this could be ending with 1 here instead, and then you have to label this 1, 2, 3, 4, 5, and then if that's the case, we could have you know, do a double correction like this, right, in the wave 2 before turning higher. But even if this is going to happen, okay, if this is going to happen, still needs to stay above this B because the sequence is bullish, right? So right now this is the most aggressive view is calling this as a wave 2. In other words, the most aggressive view is calling it like this. This is your 1, 1, 2, and this is you know, 1 of 3, 2 of 3, and then if that's the case, we will extend higher. Now this view is going to get the confirmation if Bank of America is able to break above this one, right? If it is able to rally and breaks above this one, then this view is confirmed at this point. Now if it does not break above with one, instead goes lower like this, okay, then the alternate is going to play out. That means you will have to adjust a little bit, maybe something like this, and then you have to adjust it like this. So for example, this is 1 2 3 4 5 like this, and this is the alternate, by the way, right? Then you adjust it like this, 1 2 3 4 5, and then you are doing still in the wave 2 if that's the case, and this wave 2 could be doing a double correction, right? This wave 2 could be doing a double correction unless it breaks above the previous high, right? Again, the only confirmation, the confirmation that you're looking for right now, especially at this stage, that it is ready to start the next leg higher, is if it breaks above the previous peak. Until that happens, you can always get into the situation in which you have a double correction, so doing a bigger 3S pullback like this, okay, before the rally resumes again. But so far, this sequence from here in the larger degree is confirmed to be extending higher because of this you know, like a high sequence right here. Okay, so overall then again, it will be at this point the sort of the most aggressive view, calling this 1 2 1 2, okay, and the less aggressive view, okay, the less aggressive view is calling, so this is the most aggressive view, calling like this, but you need to the best way is really to get the confirmation by breaking here, by breaking above the peak before we know that okay, the next leg higher has started. The less aggressive view calling it this like this, and if this is the case, you can potentially get another leg lower, but that doesn't change the fact that we can see extension higher. Now and then the third option is if you can count this as a 5 waves from here to here, then technically this marginal high here could be your entire wave C as a short truncated C. Okay, so in that case, this entire cycle is complete as a 3 swings with a short C, and then starts to do a bigger pullback, right? So 3 alternates. Now every single trading, guys, trading is about ranking the probability of which one is likely going to happen, right? Trading and forecasting is not about there is only one way and there's only one way and there's no other way, because if there is only one way, then if the one way is wrong, it's not happening, then people will get confused. So what will be the alternates, right? So think about it, that there are always multiple ways, just like playing chess. There is always going to be multiple ways. As you predict your opponent's move, you can be wrong, and it's not the end of the world if it is wrong. So it's all about the risk management and ranking the probability right now, because of the sequence from December 2018 low is a higher high with incomplete length. The length is incomplete, meaning it's not yet equal. That's why if we have to rank, we have to favor the upside at this stage, right? Just based on the probability, it looks to be more probable to extend higher than trying to force it to finish with a truncated C, let's say, and then starts to plunge like this, right? Alright, so I hope that you enjoyed the video, and I'll see you all again next time in another update.